Now we talked about how candlesticks represent the movement of price from one point to another point. Not just that, they also show the time it took for price to move from one point to another point. So when you look at a candlestick, it tells you that the price moved from $3 to $5 in 1 hour. That is called a 1 hour candlestick. You can say price moved from $5 to $2 in 15 minutes. That is a 15 minutes candlestick, and that's how it goes. And the way you have your time, that is 5 minutes, 10 minutes, 1 minute, 20 minutes, there is a candlestick for every time in forex. So if you look at the prices of a particular currency in 5 minutes, it will have a candlestick. If you look at the price of that commodity in 20 minutes, it will have a candlestick, because those candlesticks, like we said, show the movement of price from one point to another point. And that's how it works when it comes to time frames. Now in forex, there is different time frames: 1 hour, 4 hours, 24 hours, 1 full day, 1 month, and all those times will be shown through a candlestick. So if I want to look at the price of maybe dollars yesterday, if I go to yesterday, I'll see a big candle that will tell me how dollar moved yesterday, from what point it was and to how much it was by the end of yesterday, and it will be shown to me in a full candlestick. If I go and say, okay, what was the price of dollar yesterday between 5 o'clock and 7 o'clock, I'll go to yesterday's time, scale down to a lower time frame, maybe a 4 hour, a 5 hour, and I can see that, between 5 o'clock and 7 o'clock, the price of dollar was $2 and it moved to $3. I hope you understand. If you don't understand, this is quite a little bit complex. You can read the materials that I attached to this video. Anyway, see you in the next video.